Hello, everybody. Hopefully, I'm here. Happy Saturday. So, the world was a buzzing yesterday with all the stuff that was going on about a certain bet. And we're going to dig into that, but it's going to go way beyond just the bet. But where the world is today, what's going on with the banking crisis, how much money printing there is, and multiple angles to this whole thing that nobody else is talking about. In addition, well, I could also talk about 100x leverage and money printing, debasement. So a lot of interesting angles. Will go fast. And of course, not investment advice. And you guys know the talk of Balaji's gambit. Bitcoin would hit $1 million in 90 days. Is that even theoretically possible? Obviously, for that to happen, there needs to be hyperinflation or a big investment in Bitcoin. Or people just hold as people buy. We'll see. And is there a covert angle behind this whole thing? So let's jump in. A lot to cover. Thank you all for being here. And thank you everybody in the chat. I'll keep the big slides on so you don't look at me too much today. First of all, it all began with a guy called James Medlock. I'll bet anyone $1 million that the US does not enter hyperinflation. And Balaji jumps in yesterday. I'll take that bet. You buy one Bitcoin, I will send $1 million US. And this is a 40-to-1 odds as Bitcoin currently at the price at the time was 26,000. Right now, as I speak, Bitcoin is trading at $27,420. So a little bit higher than yesterday. And they have a custodian. And apparently, not just this bet, but a second one is also happening too. So it's $2 million on the line. But is it really $2 million? And we'll dig into that too. So first of all, the message from Balaji, is this all play or is it real? But things are happening fast. And I did talk about that $2 trillion. We'll dig into exactly what that means for debasement of the currency, which inflates hard assets, as you all know. But he says it's happening now. It'll be fast. Buy Bitcoin, get it off the exchanges, and send the bit signal, whatever the bit signal is. I don't care much about that. But, you know, sometimes I'm always very wary when anything is sold hard or pushed hard. What is the other angle behind it? But before we get to that, let's talk about some history. First of all, we do have a concern. That is hyperinflation. This is an old 50 million Deutschmark note from 1923. And the irony of this time and date, it's exactly 100 years ago. It was a 50 million mark note, and that shows you how hyperinflation can happen so fast. It is a rapid increase in the general price of goods and services in an economy, and typically the old method of measuring hyperinflation is when inflation is over 50% per month. We don't have that right now, but it is also a rapid erosion of purchasing power. And in the case of hyperinflation, prices may rise multiple times in a day. And I remember history books, one loaf of bread cost 1 million marks. So that would be 50 loaves of bread. And the next day, it would be 25. And the day after that, etc. You get the idea. But what are the causes? This is uncanny. The causes of hyperinflation. And let me know below if you think any exist today, or all of them, or some of them. So first, we have 5 causes of hyperinflation in history. One is government overprints money. When the government prints money more than the economy requires, the oversupply of currency can lead to inflation. And if this printing continues, it can trigger hyperinflation. Second reason is the rapid increase in money supply. And in an abrupt increase in the money supply, which can be increased by government spending, foreign investment, or any other change in the economy, or a crisis like now, like money being pumped into the system because of a banking crisis. Third reason is loss of confidence in the economy. Well, not only is there loss of confidence in the economy, but also there's loss of confidence in the banking industry, which is a huge issue right now, and people are trying to shore that up. Fourth issue is decrease in the supply of goods and services. And if there is a significant decrease, if things are scarce, price can go bonkers. Guess what's scarce? Again, look at the title of this video. Bitcoin is scarce. And 5, wars and political instability. They can disrupt an economy. We saw that with supply chains, etc. Can cause things to get very expensive. So the question is, you see any of these happening? All of them are happening, which is uncanny. So let's talk about a slide I showed exactly 6 days ago. in Q&A on last Sunday, and I'll be doing Q&A again tomorrow for those tune in around noon Pacific. But 6 days ago, Bitcoin was ranked number 27 on this list. Today, it's ranked number 22. That is a stunning development, going up 5 spots in just 6 days. You could argue that Bitcoin is also moving in a hyper way. Some people call it Hyperbitcoinization. I'll talk about that. So we've got to go back for a second and talk yet again about the banking crisis and what's going on, because that feeds into this whole Balaji thesis. So the US government moves to stop potential banking crisis, but it was not averted despite all the money, all the promised bailouts. The banking industry has lost respect of the public. This crisis is not over. It is not averted. Also, for this magnificent study, you guys can find this on Watch Your Guru, but some very clever student or individual put together a study of the financial risks that are similar to Silicon Valley Bank and found 186 more of them in the United States. So as I say, more shoes will drop as we go forward. Also, the US banking system is struggling to find liquidity. Here you can see all of the actions that have happened. You know, global financial crisis, that big pink block in the middle. You have C19 back in March 2020. But this is a debate now over whether the Federal Reserve should raise rates when it meets this coming week. And it's hard to fathom it would, in my opinion. How can it square from going hurriedly to erecting a huge $2 trillion credit facility for banks struggling to pay depositors this past week, and raising interest rates the next week? It just doesn't square in my mind or in the minds of many others. So it's kind of illogical. So we'll see. Let's look at what the bond market says. Quick revisit here. Big thank you to Sanjay for sharing this. This shows you the 2-year is already at 3.85%. That is the biggest drop in history. And the Fed, what are they going to do? Are they going to go fly in the face of the bond market? And remember, what I've always said is increasing rates was not sustainable because the cost to service the debt that the US has is far in excess of the national defense budget. And it's soon to be $1 trillion. And that is a lot of money, ladies and gentlemen. And that will blow the deficits, which will in turn increase the servicing costs over time, because there's no way the US government can dig itself out of the hole, nor any other governments around the world, whether you're talking European Central Bank or Bank of Japan, etc., etc. Let's look at what the Fed funds rate expectations are. And here, per Charlie Bilello, a couple of things. One, June pivot is on the cards, maybe even earlier. If they pause now, that's a de facto pivot. And what's interesting about this is the Fed have to lower rates, as I mentioned before. But if you look at what I added, the little green arrow here, the 2-year is already at that 3.88%. The bond market is forward-looking. It's expecting where the Fed funds rate will be in November or December 2023, which is good news. Very good for risk assets. So we've got rates coming down, good for risk assets. We've got liquidity coming into the market, QE, good for risk assets. Let's look at real bank rates for a second, and I'll get back to Bitcoin stuff. Trust me. But here, this is the global central bank rates. Real rates, again from Charlie Bilello, from all over the world. Almost all are negative. And those that are not, odds are the government is lying. For example, look at Brazil. The target rate, 13.7%. And they say local CPI is 5.9%. So as a credit, 8.2%. I don't believe that. Not at all. Especially when you look at Argentina, the neighbor, 105% inflation. You can't have countries beside each other and be so disparate. So are the Brazilian officials lying? No offense to any Brazilian officials if you're out there. But do I trust what governments say? No. Anyway, let's talk about the liquidity crunch. Here last week we saw the largest single tap of the Fed's emergency lending facility in the history of the world. And as depository institutions use the Fed discount window for a record $152 billion in emergency loans, totaling over 300 over that window of 7 days, I think. The hurricane siren is blaring. Banks grow cautious of their riskier counterparts, and they stop lending to them, which contracts consumer credit creation and puts banks in a tough position. It's that simple. And they need to fund themselves. But where can they? Where do they go? And the answer is they go to the Fed. But why? Why do we care about all this? And this is the story today, is not just the bet from Balaji, but what are the feasible ways that Bitcoin gets to $1 million? Not hopium, theoretical numbers. Okay, so I don't want people getting too excited, and wait till the end and you'll see there's actually some not so good news as well. So first of all, $2 trillion. What does that mean to the market? The reason we introduced the whole Fed, the money printing, the not QE, which really is QE, it's adding liquidity to the system. And $2 trillion is a lot of funds being entered into the system. Also, everybody is borrowing from the Fed directly. You can see the little white line on the right, biggest in history. And it's a very interesting situation. But not only is everybody borrowing from the Fed, but banks are being pressured by the Fed to give money to other banks, which is unbelievable. If you look at this, after this week's $30 billion rescue plan, the largest banks now have exposure to First Republic Bank. And reports are that these banks were pressured into doing this. For example, Bank of America, Wells Fargo, Citigroup, JP Morgan, all had to cut checks for $5 billion. And it just, when you see that type of orchestration behind the scenes, is it coincidence or is everything rigged? You decide. So let's look at the Fed themselves. They too have liquidity problems. And if you thought Silicon Valley Bank was bad, the Fed is sitting on unrealized, as of September 2022, losses of $1.253 trillion on their $8.3 trillion bond portfolio. They also are illiquid, and the Fed is losing money every day, $30 billion a day. So now this amount is actually $2.2 trillion in unrealized losses that the Fed is sitting on. It's just the amount of money that's being lost and printed to make up for the money being lost is staggering. So things like $1 million Bitcoin kind of become maybe theoretically possible. Let's do some math. Wouldn't be an IA show without some numbers. So an increase of, say, $100 billion in the economy, the monetary base. This is the typical formula. You have inflation calculation is CPI year 2 minus CPI year 1 over CPI year 1 by 100%. You all know that. And the change in money supply is a function of the injection of money, like 100 billion or 2 trillion, by the change in money supply, the amount of velocity it has. So if you add 2 trillion, which is $2,000 billion to the economy, that has the impact of adding 7.6 trillion in liquidity on top of a base that's already very, very large. So let's go back, and before we get to some numbers around Bitcoin, what caused the banking crisis? 1, 4 trillion of money printed in 2020, low interest rates for years and years, Fed literally buying everything. That's why they couldn't unwind the mortgage-backed securities. Fed jacking rates way too fast. It was very obvious from the outside looking in. And Fed relying on a recession to lower inflation. And again, everything smashed. And here we are. But let's get back to Bitcoin, which is why you're all here. Let's look at this. And you're all early too. Congratulations, everybody. And this is the Hardness reminder. Somebody put this graphic together. I doctored it and tweeted it last night. I added the 5 million of lost coins. As I say, there'll never be more than 14 million Bitcoin. But look here, you have 1.7 million left to be mined, 20 million total supply, approximately 16 million less 5 is lost, and there's only 1.9 million available for purchase on exchanges. Why is that 1.9 million interesting? Because 51 billion buys the remainder, or 50 billion. If somebody came in like a BlackRock or Fidelity and said, I want to buy $50 billion of Bitcoin, the price would go straight to $552,632. Not $1 million per Bitcoin, but nearly half, $550K per Bitcoin. And that is stunning. And remember, another interesting piece of numbers, $50 billion is only 2.5% of 2 trillion, which was just went into quantitative easing to bail out the banks. Now let's talk about some of the bad news. You've seen this model before. Okay, this is kind of how theoretically Bitcoin can get to $1 million, but don't get too excited. because $1 million is not what it seems. So this model here, I updated based on the additional 2 trillion in money, which is a money printing expansion parameter, as I call it, of 25%. And of course, the money supply will go up and to the right. And I assume that this 25% will continue because deficits will continue to explode, debt servicing costs, not enough tax base, etc., etc. By the way, Bitcoin just hit 27,500 as I'm doing this, which is an interesting number. It is hitting a little resistance at that level. But also, the pace at which the money printing expansion will increase will be by 20%. So 25% goes up by 1.2% starting in the year 2024. Now, what is also important is 60% of the debasement per my formula, which has worked over history, so I came up with it, becomes 15% of loss of purchasing power. So if you can buy, thank you, Mr. Mike, if you can buy $100 worth of blueberries today, next year, you with your $100, you'd only get $85 worth, etc., and on and on. Now, the key thing about this is the numbers. If you go out 8, 10 years, whatever you want, 2023, going out 10 years will take us to 2032. You can see the real value of $1 million in real purchasing power, assuming the money printing continues, which I think it'll only accelerate. $1 million in, say, 2034 is only worth $167,000. In 2032, it's worth $230,000. So it's not $1 million. It won't get you very, very far. If you imagine a home worth $1 million today in 2023, in 2034, it'll be worth $4 million. But the real value of that in real purchasing power is only $690,000. So it actually goes down over time. If you take Bitcoin and the nominal appreciation, conservative appreciation of 45% per year, given adoption, Metcalfe's law, scarcity, etc., again, very conservative, Bitcoin gets to $1.027 million in the year 2032. But remember, $1.027 million is only worth $202,000 at that time. So again, don't get too excited when you hear $1 million Bitcoin. And I do not think we will get to $1 million Bitcoin in 90 days, but I do believe it's very possible in the year 2030. Maybe a little sooner, maybe a little later, because of the debasement of fiat. That's the whole message here. But let's go a little bit further. This is a visual of those charts. It shows you exactly where things go. The orange up and to the right is the home value. $1 million home goes to 4.1 million, but the real value of it is down below in the gray line around 690. And you can see Bitcoin goes up to 1.4 million over time, but the real value again is in the blue line down below of about 249,000. And that's the big message, everybody, that I want you to take away from here. But let's go a little bit further and talk more about money printing and where we're all going. This is a great tweet from Michael J. Burry, 2000, 2008, 2023. It's always the same. People full of hubris and greed take stupid risks and fail. Money is then printed because it works so well. He's dead right. He's been wrong in some of his trades over the last year or so, but he's dead right about that. Let's talk about what hyperbitcoinization is. This is defining hyperinflation in Bitcoin versus US dollar terms, because all other fiat currencies can and will be inflated away. This is hyperbitcoinization. So you take this original chart, you take the gold price in German marks, rub out gold, change it with Bitcoin, rub out German marks, change it with dollars, and the percentage change in rub out gold becomes Bitcoin price monthly. That's what's going to happen, and many people believe it could happen by 2028. Not in the next 90 days, but could be in the next 6 to 8 years. And that's what many people believe. And then the price of Bitcoin goes up real fast. Far faster than the model I showed you here. Okay, so remember that if this happens, because risk happens fast. We saw that happen with banks real quick. Okay, let's get back to some theories that we have regarding this whole situation. Obviously, remember, everybody, big lesson 2022, trust nobody. And the two reasons why we don't trust people is we don't know them or we know them. I thought that was very funny. But Brad Mills, he did speak about how he unfollowed, and he's a OG in the space, unfollowed Balaji in early 2021 because he was spending most of his time shilling VC, pre-mine, pump coins, Web3, DeFi, Ethereum, etc. And the Bitcoin maxis did not like that. But now Balaji has come back to the Bitcoin world, and we'll see. He has apparently rug pulled before, so it's important to be skeptical. But maybe he's changed. Maybe he's found his new Bitcoin religion. I don't know. But the need for Bitcoin is greater, and maybe he came to a sensus. So that's his giving credit. But let's dig into this one. Hypothetically, now I'll zoom out for this. I'm trying to think, why would somebody take this bet? Because it is not going to happen. It's assured to fail. But there's ways you can make it win by just creating enough excitement in the space to drive the price up by a very small margin. This is one theory that I have. One is, if you have 100x leverage, you can control a position that is 100 times larger than the amount of funds you have in your account. That means even a small price movement can have a significant impact on your value of your position, both in terms of gains and losses. So for example, if you cover a bet with 100x leverage, let's say you have $1,000 in your trading account and you use 100x leverage, you could open a position worth 100,000. But remember, price goes up 1%, you can increase your position by 100%. You can make 100,000. But if it goes against you, you lose everything real fast. So that is kind of the key here. Now, my theory is, with just 10,000 in an account, Balaji, with 100x leverage, could open a position worth $1 million. And if the price goes up 1% in his favor, that would increase the value of his position by 100%. So his position could be worth $2 million, which is enough to pay back one of the debts if he loses. We'll see. So in order to do this, if he has access to 100x leverage, all he needs is 20K and a 1% increase in Bitcoin price to cover the actual losses from the trades in the next 90 days, those being the 2 million. So that is one thing. The other thing as well I'm a little bit concerned about is Bitcoin whales dumped over 200 million yesterday, while open interest has grown by 20,000 Bitcoin in the past few days. So there is some type of leverage going on behind the scenes. Spot is being dumped and people are leveraging up. Now, I don't see any meaningful spot accumulation besides stablecoins being converted into Bitcoin right now. So, Balaji's bet, if this continues, probably will not work. We don't know. But again, don't trust anybody. And do your own research, of course, as always. But finally, this will be funny. If he is right, everybody should get one of these Balaji was right sweatshirts, because then he is, and he has been right in the past, especially around some C19 things and other matters. So watch the space. But either way, it's very, very interesting. Bitcoin's gone up $7,500 in 8 days, which is a stunning move. And we're all happy to be here. And you were all early. And thank you all for joining. And thank you to the mods in the chat. And yeah, I see that. Is it irrational? Nobody has enough Bitcoin, that's for sure. But it's been a wild ride so far. 2023 has been awesome, like we expected, but it's way better than we expected. So buckle in, everybody. Hold tight. Thank you all for being here. I'll see you all tomorrow for the big Q&A, where we answer all the top questions of the week. And it's always fascinating and always a great learning experience. So if you like this content, hit the like. A lot of work goes on behind the scenes. 3,000 people watching live. Love you all. See you all tomorrow.